Joining us now to discuss South Africa's current economic landscape, doesn't get any better, does it, is Izak Odendaal, who's investment strategist at Old Mutual Wealth. Okay, Izak, we've just had a downgrade on our economic prospects for this year from none other than the Reserve Bank governor, and all the economists that I've spoken to say that she's optimistic at the number she's putting on the table. We've got the credit rating agencies who are in the throes perhaps of downgrading the country's debt. I wonder if you can just give us an illustration of something, as I asked Sharon to start with, and she couldn't really give me much good news. Maybe you've got some.
Yeah, I suppose at this stage people are scratching around for good news. Certainly the local outlook is quite gloomy. The good news is that the global outlook is a lot better. So the American economy is still growing. Europe is exiting recession. It's set to grow at about 1% this year, which obviously is not particularly exciting, but bear in mind that Europe has been detracting from global growth for quite a while now. So the Japanese economy is still in a bit of experimental phase, but they should also post positive growth this year. And along with China, which is also growing positively, albeit slower, basically the biggest economies in the world are still growing, and South Africa typically is a small boat on this big ocean, and as the tide lifts, our boat lifts along with it, provided of course that we can plug some of our more obvious holes and leaks.
Yeah. But they do say that when you're in a hole and there are a bunch of crocodiles biting at your bum, then there's no time for strategy. You've got to sort out those crocodiles and get out of the hole. And it does seem, with the AMCU strike and now with NUMSA wanting to do something similar and talking even stronger language, if that were possible, than what AMCU is talking, and others in the economy saying that it's time for them to implement this burnt earth policy. If the worst happens, what happens to this country?
It's interesting that in a speech about 2 days ago, the Governor Marcus used the term self-inflicted, and she said that we can no longer blame what's happening globally for our woes. What's happening to the economy is basically our own fault, but it's within our means to fix. So yeah, I mean these strikes are very concerning. Spillover from one industry into another, also very concerning. It's encouraging to see that the government is more involved now in terms of trying to get the parties together to negotiate, but the labor relations environment was one of the issues that the rating agencies noted, and that was back in December already when they warned of a potential downgrade. And certainly things have not improved since then.
That's an understatement. So are you expecting the downgrades then to come through and be quite sharp?
I think there's a fair possibility of a downgrade. Let's put it more than 50%. All the factors that the ratings agencies listed have deteriorated, most significantly the growth outlook, as you mentioned up front. So, I mean, we'd be lucky to get 2% growth this year. And why that's important for the ratings agencies is, of course, that they're interested in, can government pay its bills? Can government pay interest on its bonds? And obviously, if the economy is slower, tax revenues for government is slower, and it becomes difficult for government to close the deficit and to bring down the overall debt to GDP ratio.
Yeah, and that's a reality.
So I think there's a chance of a downgrade.
We have a country, as we well know, with a social safety net, which you can debate it one way or the other, but that only becomes affordable, is affordable, when you have higher rates of growth. So as the rates of growth contract, is that what the rating agencies are worried about? That we've got these fixed costs, if you like, that we just can't get out of the way, and we've built them in the system?
I think more than the social welfare side of things is the public sector wage bill. I mean, the size of the government's employee book, as it were, increased substantially over the last 5 years. Plus, they've received very generous salary increases. So, yes, the government is running with quite a high cost base at the moment, and it's difficult to bring spending down. I mean, the Treasury wants to bring spending down to about 2% per year growth in real terms. So not even cutting growth, but just reducing the growth rate of spending. And if you then take that to the next sort of issue that people are wondering about, are we going to have a recession, then one of the problems we have is that there's very little room in fiscal policy to stimulate the economy, as was the case in 2008, because government is trying to close the deficit and reduce its overall debt levels.
I wonder, I asked David Shapiro a little earlier if the dots were being joined perhaps in this expansion of the public sector, which is being lauded as creating of jobs. I wonder if the dots are being joined there as well, because you don't create jobs in the public sector, you actually extract more taxes from the private sector to pay for the people that you're putting into jobs.
That is true. Now, obviously, if people are doing their work and if those jobs have a reason, then that can add to the productivity of the economy. But we also know that's not really the case in South Africa. Our public sector is not usually productive. The big issue is, as much as the public sector has grown jobs, the private sector has pretty much been shedding jobs. And that is another thing that's worrying the ratings agencies, is the very weak rate of job creation in the local economy.
Izak, let's assume
it's an issue for all of us.
Let's assume that the rating agencies come out with what is anticipated, in other words, a downgrade. How will that impact the country? How will that impact the man in the street here?
I think the main thing is that the factors that the ratings agencies are looking at, these are well known. So there's nothing new from a market point of view about all these issues, the weak growth, unemployment, the labor relations issue. So the impact on financial markets, should the announcement be made on Friday, probably not going to be that big. The real issue is if we have a downgrade on Friday, we would only be one notch above junk status, basically. And if you drop into junk status, then there's a whole class of global institutional investors who will not want to hold your bonds. So that effectively raises government's borrowing cost. And seeing as we're still running a deficit, government still needs to borrow quite a substantial amount of money each year. It will, under those circumstances, be paying more for its borrowing. And just as an aside, I mean, the cost of borrowing, or the interest payment, is already the fastest growing item in our annual budget. We're already spending about 100 billion a year just paying coupons on money that we've borrowed already.
The unintended consequences of doing things that you don't know. Izak Odendaal from Old Mutual, and we'll be watching